Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And as per the title of this video, I'm going to be looking at the main theme, which is going to be using one of the most accurate indicators on the TradingView to look at some exact prices going forward from where we are currently. We'll also be having a look at a possible inverse head and shoulders pattern developing on the Bitcoin price, as well as looking at the wider markets and the 60-day cycle to know exactly where we are, where we're heading in the short term, the medium term and the long term. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And also a quick reminder that we do not make any predictions on this channel. Everything in this video is going to be based on possibilities and probabilities and nothing to do with certainties or guarantees. I have shown you this before, so it's a very good reminder because now that the markets have started to move back up again, we can see where the markets may well be heading in the next 5 to 6 months. So if we use the Fibonacci retracement tool, which is this one here on the left hand side, and if we go back to the first cycle, the way to measure the top is going to be from the previous top, which was here, and then take that to the bottom. And if we put that across, you can see quite clearly that the top of that cycle at the end of 2013 came all the way up to the 2.272. So just remember that. The first cycle topped out at the Fibonacci level of 2.272. And in the second cycle, and if we take it from the top of the first cycle to the bottom of the bear market, and then put that across, you can see that the top of the second cycle was right at the 2.36. So this went slightly above the 2.272 level. So the first cycle was the 2.272 level. The second level was the 2.36 level. And in the last cycle that we got, which topped out in November 2021 here, if we take it from the top in 2017 to the bottom of that bear market, we topped out both times at exactly this level here at the 1.618. So the 64,000 came up to that level, and then the 69,000 obviously came up to that level and just protruded above it. So once again, the top of the cycle coincided with one of the Fibonacci numbers here. And of course, in the first and the second cycle, where it topped out at the 2.272 and the 2.36 here, we failed to get up to those levels in the last cycle. And had we done so, we would have gone up to 206,000 or 242,000. And the question is, with those three cycles where we've topped out at the 2.272, the 2.36 and the 1.618, where is it going to be heading in the current cycle? So if we come to the current cycle here, measuring it from the top of the previous all-time high at 69,000 back in November 2021 to the bottom of the bear market at 15,400, this will give us some sort of a guidance as to where we can expect the current cycle to end. So using the first three cycles as an example of the three possible targets that we've now got, the first one obviously was the last cycle, and that was at the 1.618. So when we get up to the 175,000, this could possibly be the top of the current bull market. The second target, which we got into in 2013, was the 2.272, and that is at 469,000. So should we start moving up above the 175,000, then the 2.272 will be on the table. And finally, the 2.36, which we got back in 2017, that would suggest 536,000, call it 540,000. So those are the three targets that we have for the possible end of the current bull market: 175, 470, and 540. So let's see what happens next. But as you know, currently where we are and the immediate targets that we can look at here is the 1.414, which is at 129,000. So please remember that these are targets based on the Fibonacci retracement. If we get a completely different figure here, well, that means that the current cycle has done something completely different. And we can only base it on what we've got in terms of the historical perspective and the historical record of where Bitcoin has been in the past to give us some sort of an idea, some sort of a clue, some sort of an insight into where it possibly could go to. Nobody has a crystal ball and nobody's making any predictions. We're just looking looking at possible targets using some accurate indicators. Okay, so we're looking at the weekly time frame here to look at exactly what could possibly happen with Bitcoin as the price is developing currently. What we've got is a potential classical inverse head and shoulders developing. And if we use this neckline at the 104,000, what you can see here is a classical inverse head and shoulders pattern developing with the left shoulder here very well developed at this neckline of 104,000. And now you've got this head here, and what we now have is a potential right shoulder developing here, if that is what it's going to do. So just something that is a possibility. There's no certainties or guarantees. The probability is that whenever you get a left shoulder and a head like this, the higher probability is that we're going to get some sort of a right shoulder here, which would mean that where we are currently, we would expect some sort of a pullback. Now, of course, if it goes above this level here, and retest that as support, then this right shoulder is not going to develop at all. So this will be a non-event. And what we're going to get is a big move to the upside. But if we don't get that breakout, especially above the 109,000, which was the top that we got here on the inauguration day, then there is a real possibility that we're going to get a right shoulder here. So just be mindful of that. Many people haven't picked up on the possible scenario of the right shoulder developing. So something to just keep an eye on. But okay, just having a look at what's happening in the news. One of the most important developments over the last couple of days has been this potential China-US trade deal. And as a result of that, people predicting a price for Bitcoin in the coming months of 150,000. So let's see where that gets to. But certainly more and more people are realizing that the price for Bitcoin is going to go to much higher levels than we are currently at the moment. And if we have a look at the liquidation heat map, this has proved to be very accurate in terms of the range of prices Bitcoin seems to be going over the coming 24 to 36 hours. And that is that we've got a zone down here at 102,864. And at the top end, we've got 106,000 developing here. It's not a prominent zone yet, but it looks like it's developing up here, about 106,000. So we could quite easily get a pullback down to the 102,000 in the coming days. So just keep an eye on that, and that would just fit in with the development of the right shoulder in the coming days and weeks. If we move on to the wider markets and have a look at the SPX, what we're currently getting is some sort of a resistance at these levels here. And once again, if we look at the Fibonacci retracement from the previous high here at around 6,100 to the bottom where it bottomed out during the tariff correction, we're coming up to the 61.8. This is where you would expect some real resistance. So it looks like with a higher probability that we may well have a correction coming down in the SPX. And if you want to read the charts, this is the first part of an evening star pattern that's developing here. So this was the close of the candle last week, where you got the Marubozu candle on the left hand side. You've got an indecision candle in the middle. So what we're now waiting for this week would be a red Marubozu candle on the right hand side. And for those of you who are interested in learning about candlestick patterns, this is what I'm talking about here. This is the evening star pattern where you get a Marubozu green candle on the left hand side and this indecision candle in the middle. So all we would be waiting for is for this red Marubozu candle on the other side. Of course, it doesn't have to happen. I'm just giving you the potential of what may develop in the current week. And of course, if it goes up here, then that means that the probability of this playing out obviously is negated and invalidated. But something to look out for and keep an eye on. But certainly the evening star is the higher probability play because we have had, since the bottom here, we've had a 17% rise. That's a very big rise for the SPX. And you would expect some sort of a consolidation or even a correction after such a big move. Okay, moving on to the dollar. We're getting some sort of a counter trend rally now. This is where we were expecting this to fall down to. So this is what we were expecting, for it to come back down to these levels here, at these support levels. And obviously it went slightly lower than that. But with this particular candle, which is basically a rejection of lower prices, there was every chance of having a counter trend rally. This is exactly what we've got so far. And while we expect the dollar to have an inverse relationship with the wider markets, but as you can see quite clearly, as the wider markets have been rising, this is some of the rare occasions when the dollar also is rising at the same time as the wider markets are rising. And this is what we've also seen with the Bitcoin price. We've seen a very big rise for Bitcoin, as we'll have a look at on the 60-day cycle. And if you do a Fibonacci retracement on this chart, coming up to the 61.8, at 102, this is where you would see some sort of a pullback for the dollar, and this would allow the wider markets then to move on forward. So it looks like the dollar has a little bit more to go, which gives a potential for some sort of a pullback in the wider markets. And then when the dollar pulls back down, that should give some fuel for the wider markets to start moving back up again. So let's see what happens, but this is what I'm looking at the moment with the dollar. And moving on to gold, we've had a very powerful move when we broke this neckline here in March 2024. It's basically been very much a straight line up. However, we are getting some signs of a pullback to come. And as mentioned before, when we got this gravestone doji candle at the top of this trend, it gave us a nice big pullback to these levels down here. And what we're getting currently, if you have a look, is we're getting another gravestone doji candle, which seems to have arrested and caused a loss of momentum to this big rise that we've had so far. So you can see quite clearly that that gravestone doji candle has caused a loss of momentum, giving us this consolidation that's going on at the moment. However, I would expect some sort of a bigger pullback with the power of this candle here. So let's see what happens. Okay, moving on to the 60-day cycle for Bitcoin. Currently, we bottomed out on day 38. That was the measure from the previous cycle, which failed, and we started this new cycle. And when Bitcoin came down to the 74,000, that was on day 38 of the previous cycle. And the thing to notice here is that whenever you get a failed cycle, i.e. closing below the start of the previous cycle, which we did over here, this caused the failed cycle here. And whenever you get a failed cycle, the higher probability is for a very powerful move to the upside. And this is exactly what we're getting at the moment. This is an unprecedented move after a failed cycle, and it may still have a little bit more to go. But so far, from the 74,000 to the current high that we got today at 105,700, this has been a 42% move, which is unprecedented within one cycle. And you would think that after such a big move, you would be expecting some sort of a pullback. So let's see if we get this pullback, as I just showed you with the inverse head and shoulders pattern. And the current cycle should be ending around about the first week of June. So we've still got quite a lot of room for this price to go to much higher levels. However, what we are at the moment, we're in this mid-cycle point between the start of the cycle back here on the 7th of April to the first week of June. So we're in this midpoint where you normally get some sort of a mid-cycle pullback. And so far, we haven't really had too much of a pullback as you would normally expect in these mid-cycles, like you get one down here, got one down here, and we got another one down here. So before the white line, the midpoints of these cycles, you normally would get some sort of a pullback. So either we've already had this pullback, which has been a shallow pullback, or we're going to get another shallow one or a deeper one here from where we are. And that would again fit in nicely with the inverse head and shoulders, with the right shoulder beginning to develop over the next few weeks. So let's see if that develops, or whether Bitcoin wants to just power ahead and start moving to higher levels. And we would find with a higher probability that if it did want to go higher, that we would get some sort of a resistance at the previous high of 109,000. That would be the natural place for it to have a pullback. But at the moment, it seems to be consolidating around about the 104, which again goes back to all the way here where we identified this long-legged candle. And this was the range that we had at 104 at the top and 92,000 at the bottom. So it could well be that we have some sort of a range bound for the coming weeks here. And what would be very bullish would be that if we could continue around about above the 100,000 into the end of the cycle, and that would give us a lot of fuel to challenge that 109,000 here. And this is where you would expect with a higher probability for the bigger move to come in the next cycle in June. And something to note tomorrow is that we do have the CPI coming up tomorrow morning. The USA time, i.e. Eastern time, is 8:30, which is UK time 1:30. The previous print was at 2.4%, and the forecast is at 2.3%. So if the figures come in anything different to that, then do expect a lot of volatility tomorrow just before the markets open. And those of you who are interested in our portfolios that we run on the private member section, this is where we are with the current state of play. We have two portfolios running. They both started at 100,000. The passive portfolio currently is at 310,000. and the trading portfolio is currently running at 430,000. And despite having a really torrid time over the last 18 months with the Bitcoin miners, they haven't really produced according to expectations. But despite that, with the trading portfolio especially being up at 430,000, doing some of the ratio trades that we've been doing in the private member section. So by doing those ratio trades, we're up by over 100,000 from the passive portfolio, which we've left completely untouched from having chosen some of these Bitcoin miners. And as you can see with here, the highest it's reached is 726,000, which was on the 6th of December, and the low that it reached was on the 8th of April at 306,000. So quite obviously, this is a very volatile area. So what that's telling you is that this is a highly volatile space, and it's not for those who can't withstand 50-60% pullbacks. And these are the ratio trades that we've actually conducted since the beginning of 2024. As you can see, we started on the 24th of January, and the blue numbers are the profits. As you can see, we've had some quite nice figures. We've done about 40 trades so far, and currently we're in 3 ratio trades, and there are obviously other opportunities coming up in the next few weeks and months as well. And just to show you some of the volatility that you will get with the Bitcoin miners, and to give you some idea of what's happened in this current cycle with the Bitcoin miners, many people have regarded this to be a bit of a disappointment, and I would agree with that. Over the last 2 years, this hasn't really performed very well. However, if you take it from the bottom of the bear market where we started, at the end of 2022, we did have from the bottom to the top, we did get a 10x for Marathon Digital Holdings, and some of the other miners like Cypher Mining, we did get around 13-14x. So that happened during 2023. But as you can see quite clearly, since then, we've had a rundown all the way down by 70%. So this is like a bear market that we've had over the last 1.5 to 2 years. And along the way, we've had these pullbacks here. So while we had that 10x move, in between that, we still had a 46% pullback, another 34% pullback, and one here, which was quite a big one at around about 64%. So while we had a 10x, you can see quite clearly these are incredibly volatile stocks, and it's not really for the faint-hearted. If you can't stomach these big moves to the downside, then the Bitcoin miners are really not for you. And as I say, it's been very disappointing in the last 2 years here. But this is the range that we're in at the moment. And currently we're moving off the bottoms. And if the Bitcoin miners perform as we would expect them to perform, then we could well be in a very big move here. And of course, there are no guarantees or certainties. And if Bitcoin performs as we would expect it to perform, as we've seen earlier in the program, in terms of its potential end targets, if we had a look at similar targets for Marathon Digital Holdings from its previous high at $83 down to $311, where it bottomed out at the end of the bear market, then the potential that we can see just to get back to its previous high at the end of 2021, from where it is currently, it closed on Friday at 1576. So from there onwards, just to get back to its previous high of $83, that would represent a potential 427% from where it is currently. Obviously, nobody can guarantee what it's going to do, but surely if Bitcoin does do what we're expecting to do and go to a blow-off top anywhere around 175,000 or even higher, then we should be passing at least the 61.8, which is at around about the $24-25, or the 78.6 Fibonacci at $41, and the previous all-time high of $83. So these are the potential targets that we can look at from where we are currently at 1576 to $44 and at least $83. And many of the members have joined the private member section because we do 2 videos per week covering both Bitcoin and the miners, and we run that portfolio that I've just shown you to give you a picture of exactly what we do there. And obviously we do the ratio trades, and as you can see in the last month or so, since the last video I did for the general subscribers here, we've done 7 members videos since then. So we do 2 videos on the private member section, one on a Wednesday and one on the weekend. But many people join because they get a market update every single day at the end of the closing of the trading session, and it gives you an insight into all the action that's happened on that day with both Bitcoin and the Bitcoin miners. And I also do special postings when there's important information or important events taking place, like the CPI data and the FOMC meeting. So if this is of interest to you, then below any one of my videos, you'll see that there's a join button here, and also in the description box, there's another join button there. When you click on that, you'll get this box in the middle, and for the price of a coffee per week, You'll have access to 2 videos a week, as well as access to ratio trades and the market updates on a daily basis for a detailed analysis on both Bitcoin and the Bitcoin miners. Okay, so we'll leave it at that. Hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.